Welcome to CEO Money. I'm Michael Yorba. Thanks for joining us. I have Glenn Bierman, CEO, and Natalie DeMarco, President of Tycon Partners. Glenn, Natalie, welcome to the show.
Thanks for having us today.
Thank you, Michael.
Oh, my pleasure. It's always a pleasure to meet with you. You're so upbeat and you're so ahead of the curve with what you guys are doing. So, Natalie and Glenn, you're the co-authors of an up-and-coming book, Raising Growth Capital, and how to take your company to the next level. Talk to me about this.
Great, thank you.
You're welcome.
Well, we just felt that a lot of companies out there, they're not always aware that they have an option of going public. And so this is a how-to book in terms of raising growth capital in an area that they may not know is available to them. Mm-hmm. So, and Tycon, we work with companies, they're typically in the growth stage, at least having, achieved $1 million or more, and in revenue, of course, and experienced substantial growth year to year. And we provide them a pathway to public markets. So it was a natural, organic way to take what we do for our clients and spread that, out there, get that word out there with this upcoming book. So most companies are not aware, like I said, that doing an IPO and going public is a viable option for them. And, that's basically what we're doing with them. Number one, if they're not aware that going public is an option, and two, they're also unaware of the benefits and the process. The process, obviously, we want to demystify that for them.
Yeah, you have quite the network when it comes to the process. I mean, we've had several conversations offline, and I have always been just amazed at the people you come up with. I don't care whether it's on the Nasdaq or it's on the S&P or it's somebody else in the outside that actually is the power behind the throne. You bring all of that out. Now, before we move forward, I noticed that you've got a foreword from a mutual friend of ours.
Yes, Kenneth Polcari, or Kenneth Polcari. Kenny to his friends. Yes, he's an amazing expert on capital markets. He's been on the floor of the New York Stock Exchange for 38 years. He's a New York Stock Exchange Floor Governor. And he's also an CNBC. Scratch that, CNBC. That was a faux pas. He's a CNBC Market Analyst. He's also a public speaker. He has a daily blog on markets and throws out a good recipe or two at the end of his blog, too.
Good. So they're amazing.
You get market updates and recipes. How's that?
Money and food. I love it. All right, Glenn, can you talk to us about the process here that you're helping people with?
So, as a former director, board member, and CEO of public-private companies, doing an IPO is kind of like having a second business. And if you talk to a CEO, as you know, Michael, running your business is a full-time job as it is.
Absolutely.
We regard going public as a second business, and we then become an outsourced project management team for that process. Mm-hmm. With that, we bring to the clients, or we assist our clients with all aspects, which includes organizing the company structurally. It includes reviewing financials, setting up the presentation, and then we take them on the path to introducing them to bankers. And in most of the case, when a company's done north of $1 million, maybe they did 5 and they're headed to 10 or wherever they are, they don't typically have extra cash to go through the IPO process, which is expensive in terms of there's a lot of money you need to expend outside of the normal business. So we also assist our clients with that bridge to the IPO. And we don't charge any success fee for that. We think that's just part of what we need to do for them. And so it includes the underwriters, it includes the attorneys, the auditors, the transfer agents, the Edgar filers, the marketing companies. And we don't require our clients to use them, but we introduce them as another resource. And most importantly, aftermarket.
Mm-hmm.
We want to create real public companies that trade like real public companies, which means you have to have a high volume of trading that's consistent and a stable stock price. So we also then fulfill the financial PR function for our clients, so that we can keep them in the news the right way and keep the market moving.
That's well needed, and I'm glad you brought all that process out, because people are going to go through this. They get the idea that they want to do an IPO, and they think that they're successful enough to do an IPO, but they don't really understand the downside and the benefits. Can you talk to us a little bit about that?
I think what's happened is, as the markets have changed,
Right.
you see some periods of time there was very few IPOs,
Mm-hmm.
and now it's gone the other way. It's gone up. And what's changed now is there's a lot of smaller IPOs, 50 million and under, occurring now, because the market is receptive to it. The benefits for the company, unlike going to a private equity or a venture capitalist, is you're not giving up any board seats. You get a public valuation as opposed to a private valuation, which is always much better, typically 10 to 15 times being public than being private.
Mm-hmm.
And you then can access the public markets to create a new currency called public stock. So if your stock is trading properly, you could use that stock to go and make acquisitions if you choose. And so downsides, I think, from most people's view is, the costs. And there's a misnomer there. It is true, and I know there's been a lot of buzz in the political world about maybe going to 6-month reporting than quarterly reporting, which could save companies a lot of money. But there is a downside. If you're a smaller company and you think you can go to a top accounting firm and a top legal firm, you will spend north of 7 figures easily. We don't recommend that. You don't need that. We help them find qualified attorneys and auditors to keep those costs in check. Yes, it'll run you a couple $100,000 to $300,000 around there as a budgetary to get the process done. And it's then manageable if, in fact, you need funds to do that, for us to help them with some introductions to get that bridge capital to cover those costs.
Critical that you brought that up earlier, and I was going to circle back on that point right there. That's something you don't always get in this industry. Right. Show up with the money or go away until you have it. And that's something that's where you're really helping people to get into the process. Brilliant.
We consider ourselves their partner, so we're partnering with them. So obviously it's win-win if we can get them off to the races by making the right introductions.
And I want to emphasize again, we don't charge a success fee for that. We truly align ourselves as a partner to our clients. We have a current client in the process that I'll talk about a little bit more. And our client, when he calls up, he says, "Hey, partner, how are we doing today?" Because he does regard us as a partner, because our job is to fill all the gaps in this process and be the glue, if you will, to make sure every party's talking to each other, the information's flowing properly. We also get intricately involved in helping drafting the registration statement, and then coordinating all the professionals in the company. And to talk a little bit more about this client, I can't give you the name right now because they're in confidential filing. Sure. It's interesting. We started them by registering a Reg A Plus filing. Okay. And I have always told our clients we do the Reg A registration in an S1 format, which is a traditional IPO format. Mm-hmm. And Reg A Plus, it is still a tool, but it's not gotten to the level of sophistication that it needs to for a company to create a real public company. And what I'm referring to, the Reg A Pluses that have gone out there so far have had very poor aftermarket support.
Right.
And so sophisticated institutional investors, just the word Reg A Plus, they don't want to invest in that because of that reason. That being said, if we do a Reg A Plus, we would do it as a firm committed offering with what we call a green shoe, which means you can have an overallotment of shares, which gives you more aftermarket support in that format. And so in registration, the first confidential registration, we started to introduce bankers, one step forward and said, I'd like to underwrite this deal as a traditional S1 with a firm committed offering. And for those in the audience that might not know the difference, typically at this level of offering, you get a best efforts. I mean, we'll go try and get your money raised.
Yeah.
Getting a firm committed offering with a traditional S1 is the best of the best.
Absolutely. And you're not going to get a lot of people they'll stand behind their word like what you're just saying. I mean, because not everybody's IBM and can draw that kind of a crowd. I get it.
Right.
Exactly.
Right.
All right,
We're
we're
looking for compelling stories as well. So the financials always have to be there, but we're looking for the compelling story. We know some of the sweet spots on Wall Street right now. So obviously, if a company comes to the table and they have that industry sweet spot, that certainly makes it more fun.
Most important, you hear this all the time from sophisticated investors, they have to have good management.
Yes.
And what you hear from the sophisticated investors, we'd rather invest in great management and mediocre technology than mediocre management and great technology.
I agree. That's really the big wild card there is the humans. All right, we're going to talk more and more as we go forward. I know there's going to be new companies that you're going to debut and talk about, new processes. Show me that book one more time.
Oh, well, we have the cover.
Okay.
The book is out Q4, but we have the cover.
Beautiful.
Approved by our publisher, so.
I can't wait.
It's great.
I can't wait to visit with you two when I come to either Florida or I'm up in New York. But it's going to be soon, and I'm looking forward to it.
We are too.
Well, we hope to be hitting the bell at Nasdaq end of September, beginning of October.
I'm sure you will. All right, let me say goodbye to the audience, and we'll talk soon.
Thanks very much for having us.
Thank you very much.
Thanks for being on the show. All right, you've been watching CEO Money with Michael Yorba. Thanks for joining us. Follow us on Facebook. Like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.